So yeah, from May 4th till now, they've added about 33K more Bitcoin. That's a ton. And that has had a lot to do with our big run as well. Just like the bright green line, we don't want to see them go down, because when they're moving down, especially if they're both going down together, bad sign for crypto. But you can see the turning point.
Hey, everybody. Welcome into the Thinking Crypto podcast. I have another great episode for you. Joining me today is Brian from Santiment. And you all know we're going to do a deep dive into the metrics around Bitcoin and all the top altcoins. And we are recording this on Wednesday, May 21st, as Bitcoin has just hit a new all-time high. Brian, how are you feeling about this new all-time high?
Yeah, it's obviously great. It was short-lived, and then we saw a little bit of a retrace. So I think for a lot of people, it's bittersweet. But we were kind of expecting that this was coming up because there wasn't much greed and FOMO coming from the crowd. And all of a sudden we hit it. There's a quick celebration, and then back down we go. Not dramatically, but enough where people are kind of unsure of what's next. So I'm excited to dive in with you.
Yeah, and that unsureness or uncertainty that people have right now, they seem to not believe this rally, right? There's kind of a disbelief because they saw what happened with the tariff uncertainty that drove the markets down. So they're not sure if we're out of the woods yet, even though the stock market is V-shaped recovering. Bitcoin is obviously touching new highs. So let's look at the sentiment. What are people saying? Is there starting to be some positivity or still uncertainty?
Yeah, we'll dive into a few of the posts we put up today because I think they're pretty applicable, both sentiment related. But here we got a post from our founder. It's essentially this huge social dominance spike around Bitcoin. And the blue is just the social volume, but the red, this big spike here, is related to the ratio of all positive comments versus all negative comments. We haven't seen a spike this big all year long. And sure enough, about an hour or so after this spike, because these are just 15-minute candles, so roughly about an hour goes by, we hit that all-time high and then quickly dive back down because the bullishness is just through the roof from retail. They're just going nuts, and they think we're on our way to 115 and 120. And as we've talked about on many of our shows, Tony, when the crowd expects that, we usually aren't there yet. We need the crowd to be in pain, be worried about economic things like tariffs and, the next FOMC decision with interest rates. And there just was suddenly way too much greed as we were crossing 109 and eventually hit that 109.5K mark less than an hour later.
Interesting. It's so funny how the market does the opposite of the herd, even on the micro, not to mention the macro. So that's very interesting.
Absolutely. And then we have the actual raw mentions of all-time high, right? Because these are all going to be related to Bitcoin. It's the only major sector that did hit an all-time high today. So we just did a little query of ATH and combination of all and time and high and all time and high, all the combinations. And we get this big spike that happens, of course, when it happens. Makes sense. But when the crowd is conscious of it versus when they're kind of ignoring it, that actually matters a lot. If the crowd is, focused on meme coins and Ethereum too much from their recent rally, maybe we won't even see a big spike like this. And especially now that we've dropped, I think the next few hours are crucial to see whether people are still eyeing whether we go to 110 or not. That's obviously the big psychological resistance now. But even just raw keywords like this can make a huge difference in our analysis of where things go.
Yeah, it's fascinating. I'm hoping, this is not short-lived. Obviously, we have to expect volatility. Bitcoin could pull back and retest support levels. But personally, I'm hoping, based on things like global liquidity, what we're seeing whales are doing and much more, that we are headed to maybe a 120, 125, 130 range, maybe by June. But, that's just, we'll have to wait and see. And I don't know, maybe you can show us what the whales are doing.
For sure. Yeah. So on the whale side of things, two key lines, we've gone over these in previous episodes, the overall 10 plus BTC wallets and how many Bitcoin they're holding. When they start to go down, that's when these prices that are represented by these green bars just plummet. As long as they're accumulating, we're usually on the right track, or at least we kind of range for a while. So as of late, the 10 plus BTC wallets are doing pretty well. They did kind of start to taper out over the last week or so. And if I refresh the next few days, just to get us up to present, we do see a little bit of an uptick as we hit this all-time high. So clearly the large wallets, the millionaires out there, did boost us into this uncharted territory we've never seen before. And then probably the most valuable tier, if not one of the most valuable metrics in crypto, in my opinion, is what the 10 to 10,000 BTC wallets are doing. So that way we're excluding at least some of those top liquidity providers on Binance and Coinbase that kind of skew the data because they're just there to provide liquidity. So these are actually mostly active traders. Yes, still plenty of exchange wallets, but they do a pretty good job of showing where we're going. And yeah, they've been on a good run. If we go back to May 4th here, when they dipped a little, they were at about 13.48 million. Now they're up to 13.51. So yeah, from May 4th till now, they've added about 33K more Bitcoin. That's a ton. And that has had a lot to do with our big run as well. Just like the bright green line, we don't want to see them go down, because when they're moving down, especially if they're both going down together, bad sign for crypto. But you can see the turning point. Even about a week and a half prior to the tariff announcement, they were climbing pretty steadily. You can see they reacted, at least the 10 to 10K reacted to the tariff news, and then it was just up and up and up ever since then.
And this is fascinating because when I also zoom out to, let's say, early 2024, we see what a major profit taking or entering into a short-term bear market looks like, because they were dumping on the buy to rumor, sell the news event on the Bitcoin ETF launch. I think you can see it on your chart here.
Mm-hmm.
So as long as we're not seeing something like that, we're pretty good.
Yeah, let me check out what you're talking about here. So early 2024, especially in May, if I remember correctly, just about a year ago, almost to the day, that was when we saw those Mt. Gox bankruptcy liquidations going on. And that probably skewed the data a little bit. But even after that, right, like in June, they were dumping pretty hard and prices fell with them. And it wasn't until the middle of the year, this was actually the Trump assassination attempt here, right around the 4th of July, I think maybe a day after, I can't remember. But they just went on this massive run, and you can see as prices just followed them along.
Yeah, for sure. And it's also kind of in line with that sell in May, go away narrative. The summers are usually not that great for markets. I'm not saying that, that's always the case, but it's usually boring sideways action in this. And then it's just, though, if you plot the timeline and the Bitcoin ETF launch, in early last year in Q1 and the run up, it just, you just see the correlation there, and the whales playing the market, because the herd was very bullish. Bitcoin ETF launch, we're not stopping. We're going to keep going to the moon, right? And then, of course, they took their profits.
Exactly. Yeah, I remember that ETF launch was like this disappointment because everyone thought it would just balloon crypto, and it wasn't until the crowd kind of settled down a little bit that we started to see the positive results. But yeah, speaking of the ETFs, as you were mentioning that, I was checking out our dashboard. We've got inflow and outflow data now that goes back to last September or so. So roughly 8 months of pretty valuable data, because you can see how much the inflows of money going into these Bitcoin ETFs really correlate with high price movements. And when they actually outflow, that's when we sink. Not a coincidence, because these are just really good representations of what on-chain whales are doing too. Usually there's institutionals, and those very valuable on-chain whales are kind of acting in unison to an extent. So you can see ever since April 16th, we just went on this torrid run of tons of inflows. I wish we had data even before September, because I don't know if we've seen a 5-week stretch with this much inflow. I think it's closing in on $6.5 billion over the last 5 weeks inflowing into Bitcoin ETFs.
Wow. Yeah, this data is very telling. And to your point, the whales out there and even the folks at BlackRock and Fidelity who are pitching their clients, put your money into our ETF, right? They're not doing this out of gut feeling. They're looking at data. They're looking at market sentiments. They're just seeing the blood fear, depression from the tariffs. See, everybody's scared. The prices are down. Time to load up. And then you just see this playing out on the charts here.
Yeah. And sometimes they're just literally looking at the books on exchanges. And if they see just a huge buy wall from retail traders, they can find easy ways to sell and then use their capital to know that they could sell at something like 109K when everyone's trying to buy in, waiting for 110, and then they sink it down to 105, 106, buy back in, and that's how the rich get richer. So they're using real order books as well as, on-chain data and sentiment data like we have.
Yeah, for sure. It's like rinse and repeat for them. And I hope the folks watching and listening to this, who are maybe new to all this are learning a lot from it and how smart money operates, because it's important to start thinking like them and not be part of the dumb money crowd, as they would say.
Yeah, exactly. And you can follow the dumb money crowd and just use them as almost a counter signal. If you're seeing all over your timeline, tons of people saying that 150K is right around the corner, that's a signal that maybe you've got some time to take some profit and invest in something else, right? Doesn't mean Bitcoin's going to crash, but it means usually you can pump the brakes a little bit on your expectations because everyone else is already buying into that narrative, and you don't want to be on the same train as the small guys. You want to be on the same train as the 9-figure USD people holding Bitcoin or whatever else coin you're keeping an eye on, and they're going to lead the way.
Oh, absolutely. Can we take a look at stablecoin supply and exchanges, specifically Tether, of course, and there's USDC, but Tether being the king of the hill, because the Tether dominance I've noticed has been on its way down on that chart, respectively, because you're seeing the liquidity start to move into the market. But what are you seeing as far as supply?
Yeah, so we can look at it a few different ways. This is just a general template I like to keep tabs on. It's the overall supply and exchanges for Bitcoin, which has been plummeting, as has Ethereum, by the way. Ethereum's at like a 10-year low. Bitcoin's at almost an 8-year low in terms of ratio of supply and exchanges, in terms of the big piece of the pie sitting back in cold wallets and elsewhere versus actually unknown exchange addresses. Meanwhile, top exchange addresses, we like to check those out for stable coins. So the top 10 liquidity providers, essentially, they've actually been going down. So there's a little less dry powder than there was because people had been scooping up a lot of Tether. Going even back to early February, there's just been a bit of a consolidation of the largest Tether addresses moving into smaller wallets as people were liquidating right as prices were dumping. USD coin, on the other hand, looks okay, but I also want to check out just the overall percentage. So it's important to check out both perspectives. Let's just look at the supply. Okay, so this is just the overall percentage supply. I'm just going to lock it so it stays on Tether, and then I'm going to switch to USDC, and we've got both of them together. And so, yeah, the overall percentage of supply and exchanges has actually been plummeting pretty hard for Tether, kind of moving the opposite for USDC. Overall, I think it looks fine. This isn't, necessarily terrifying. But, this was a really good signal that we were in a pretty nice bull cycle. I value Tether more because it is the larger market cap. And it going down was kind of a sign that people were getting scared. And then even when we reversed, it continued to go down, which is quite interesting to me. I don't know. How do you take this, Tony?
So I know not all of it, but a good amount of the USDT supply is used by whales and different folks trading. So usually, and again, there are outlier moments for this, but usually when that supply is starting to diminish, it means it's moving into the assets. like Bitcoin and altcoins. So maybe that's what's driving some of Bitcoin's activity right now. And then you look at like the Tether dominance, similar to like Bitcoin dominance, it's been on the decline. So showing, and what we've seen historically for all the rallies, even in Q4 and even in early 2024, it was peaking and then it started dropping, and then the prices of the market started rallying. So it's like this inverse correlation, right? It's like the supply, that the liquidity from Tether going into the assets themselves.
Yeah, great point. I totally see what you're saying there.
Yeah, so we'll see how this plays out. Yeah, and it's funny because when you zoom out on the Tether dominance chart, when you have these rallies, it goes down, but then it starts picking back up as whales or whoever take their profits and put it back into the stable coin. So it's very fascinating to see that correlation.
Most definitely. And
sorry,
I wanted to show this too. Just look at the overall massive level of discussions going on toward Bitcoin versus everything else. I mean, we're always getting more Bitcoin talk than usual, but this kind of factors in the average rate of discussion. So when you see Bitcoin having such a huge lead over everything else, you better bet there's something going on, and an all-time high is going to certainly catch some headlines and divert a lot of the, Memecoin and altcoin crowd back to BTC and start speculating on what's next. So you can see that, the positive sentiment a little over half, neutral at about 16.8%, and negative a little under a third of the commentary. That's pretty normal. That of course is after, this morning when things were looking very euphoric and people were already speculating about 120K and above. So you can, of course, anytime you want, just go to the social trends page on Santiment and see the overall summary about what's going on. We even cite some of the resources and some of the posts from many recognizable names you'll see on X or Reddit. Smaller coins, AW is a pretty small one. Dogecoin, of course, the largest meme coin. Ethereum, which we haven't talked about, but it's been on one hell of a run here in May, Tony.
Oh yeah, so why don't we just jump into that, because I'm very curious about all things Ethereum right now because of the Petra upgrade. In addition to the rally we saw, a lot of people were calling for Ethereum's death. It hasn't done anything this cycle, and then all of a sudden it does this face melting rally, and it seems to be showing a lot of strength and the start of something that will likely continue. If the bull market continues, of course.
Totally, yeah. So one thing I like to check out is just the overall utility, and we actually see. Whoops, let me make sure it's refreshed. Yeah, so it kind of peaked at about 591K daily active addresses, which is a ton. Back on the 16th, it's fallen a little bit. So it's lost a bit of steam, just like the price has. Expect that if you start to see utility picking up again, whether it's daily active addresses there, circulation there, or network growth, if any or all three of those really start to rise, that's a sign that we're getting into a bullish divergence again, and Ethereum could be well on its way to 3K and beyond. Still very far away from its all-time high. That says something about how much Bitcoin has dominated over the last, almost 4 years. If I remember, it was like November 2021 or something when Ethereum saw its all-time high. Might as well check on that. Make sure the info is accurate. Yeah, way back here.
Oh, sorry, I didn't mean to interrupt you. Yeah.
No, that was all.
Oh, yeah, that definitely makes sense. And also, it's like, we've seen this story before. Bitcoin leads the show, right? It will pump and everybody will get excited. Then the rotation of liquidity, and then you start to see ETH and Solana, XRP, meme coins go nuts. It's the rotation of liquidity. So when you look at it right now, even the Bitcoin dominance chart, Bitcoin dominance is spiking. It was crashing like a couple of weeks ago, but then it did a V-shaped recovery, if you want to call it that, and it's headed the other direction. So it's no surprise Bitcoin's stealing the show right now.
Totally. And we can also check out just the overall average returns, and I'll do this for Bitcoin as well. Let's just do it for Ethereum first while we're here. So I like to look at 30-day average returns for a good short-term snippet and 365-day for the longer term. We'll just pin the axes together. So their lines here are both 0%. Anything above means that we're a little bit overheated. The network is too full of profiters. Anything below means we're a little too full of losers, people who have lost money when, in general, if you go back in time for all of these assets, it's going to be a zero-sum game, and we're going to hover right around 0%. So we got very low back here in late March, and of course the big crash in early April. And if I go and refresh to our latest, let's make sure these are on 1 day here so we can get a little granular. Yeah, so short-term wise, it's fallen back down to earth. It was like way up at plus 35%. And that's obscenely high. We hadn't seen that since, May 2021. But the long term is still in negative. So it's kind of a matter of perspective. Are you investing in Ethereum for the quick gains? Probably not. I think Ethereum is something the crowd kind of has a consensus on, that it's more of a long term hold and forget about it for a while. And that's justified by the fact that the average returns are in the negative range here at about negative 8.3%. So as long as it's below zero, you're actually buying in or adding onto your position at a less risky time than the usual time in the course of Ethereum's history.
That's very insightful and just really great data, because if you're, and I also, try to remind people about this, if you're just doing this by your gut feeling or whatever it is, you got to be careful. But if you're using the data like this to validate, and especially from a macro perspective, it can position you to make the right bet. Obviously, black swan events can happen in markets that we don't control, we don't know about. But if everything goes according to plan, this is a very good place to take positions.
It's all probability at the end of the day. Anyone who says they know for a fact that the price of an asset's going to be at XYZ on this date, they're lying. That's not possible, because the crowd in real time and the whales in real time are changing their minds and doing irrational things and causing the trajectory of how something looks now to be changed for the future. So all we can do is be like, well, 80% of the time when we're seeing the MVRV way down here, it's usually a good opportunity to buy. Do you want to risk putting some money down on an 80% certainty? Well, I think a lot of good traders do, knowing that it's still a risk and there's things that can go wrong, or, the US and China can have a whole new tariff war go on and just change everything. You kind of have to trust that there's always going to be a little baked in risk there.
Oh, for sure.
And while we're at it, as promised, I just wanted to show Bitcoin here.
Yep.
Which looks, obviously the long term is going to look better because Bitcoin's way outperformed Ethereum still over the last year, but it hasn't over the last, 2-3 weeks, even though today was a great Bitcoin day and more of a moderate Ethereum day. But we can see the average returns 30-day wise at about plus 8.6%. So there is some risk there. There's a lot more risk if you look at the long term, which it's up at plus 24%. So contrast a plus 24% MVRV for Bitcoin versus, what was it, -8 or so for Ethereum. The math says Ethereum could be the better short-term bet, assuming Bitcoin can tread water here and allow some altcoins to benefit from some profit redistribution.
Oh, absolutely. And it's what we've been talking about with the rotational liquidity, and which may give you the bigger percentage gain of returns. It's not that Bitcoin won't keep going up, but to your point, it's approaching, knocking the door at those levels where it becomes even more riskier, while Ethereum is the opposite. It's not as risky because of where, compared to the MVRV, for the historical, it's still in a very good place.
Yeah, exactly. That's well said.
Can we take a look at XRP and what's happening there?
All right. So XRP, it's been a bit of a roller coaster for XRP from what I've seen. So we had that huge run. Let's zoom in a little. We don't need to go back to 2020. Okay. So XRP, it had a bit of a run about 2 weeks ago, got back up to above 260 before retracing and kind of being a bit underwhelming ever since. We could even compare it just for, a direct contrast to Bitcoin. We'll add the price versus Bitcoin, just the ratio here. That's the red line. So you can see that the candles here represent its overall price in USD versus price versus Bitcoin. And it's really started to trail a little bit. Let's go to that top over the last week. Okay, so yeah, ever since this big top here, we've watched the price versus Bitcoin really start to struggle. I'll hold down shift so we can see. Yeah, so its ratio versus Bitcoin's down about 13%, whereas XRP USD is down about a little over 9%. So yeah, it's one of those altcoins that's kind of fallen behind a little bit as of late, but many kind of predicted that might be the case because it had such an enormous start to its year, got a little above $3, I remember, then made another run here just last week. And of course, it's not doing much ever since, but maybe we look at the funding rate for XRP. It's pretty neutral. That's what these green and red bars are. You really want to focus on stuff like this, like when the tariffs were really freaking everyone out. XRP was one of those assets seeing just a ton of shorts opening up. And of course, when markets reversed, these shorts got liquidated and just made all the longs more money because the liquidations, the money coming from those shorts just go straight into the pockets of the patient people that were not freaking out around here.
Interesting. And what's the MVRV on XRP?
It's about as dead even as you can get on the short term, up about 0.15%. Long term wise, still some risk. It's up about a little under 31% right now. So that's even higher than Bitcoin's long term MVRV. And that's got to be due to how it ended 2024, and then that secondary rally right before Trump's inauguration. So this put the long term MVRVs like right here. On December 2nd, it was at plus 201%.
Wow.
And the short term was almost 2x at plus 95%. So yeah, that's a sign we're at a bit of a danger point just due to the math. There's only enough room for so many people to be profiting. And pretty much everyone was riding the XRP roller coaster as it was showing, news about having its success over XRP or over the SEC, excuse me. I still think it's a great investment. I'm a fan of XRP. I've seen a few people on the comments of these videos with you think that I'm against XRP. I'm not. We have a good relationship with them. We even have a custom XRP dashboard that I didn't prepare today, but I could show it next time. I mean, there's a reason it's the third largest market cap by stablecoin. I think it's got a really bright future. Really turned around its reputation from the OG days when everyone was using it in tandem with words like centralization and kind of making fun of it. I don't know if you remember that far back, but
oh yeah,
I remember that was my introduction to XRP. It was almost like a joke to people, and very gradually it's really started to strengthen its reputation. And here it is as the third largest non-stable coin with I think a good future ahead of it as long as Bitcoin can lead the way.
Oh, absolutely. And I know, folks, look, this is the crypto industry. You talk anything, you say any bad thing, even if it's like the data, and they'll start throwing tomatoes at you, right?
People want their bags to go up, right?
Exactly.
And they're worried that if a talking head says they're concerned about the way an on-chain metric looks, that might cause markets to flush. I don't think we have enough influence to cause markets to do anything special, and there probably are not a lot of XRP whales that are tuning into our analysis. They might use Santiment or something similar to make their analysis, but trust me, we have no incentive. I don't even own crypto. Maybe you believe me, maybe you don't, but my take is to be as unbiased as I can, and I think you're the same way, Tony.
Yeah, for sure. And that's just why, I keep hammering home, and some people may say, why do you keep repeating that? Well, we're looking at the data, and that's the direction and the way we should do it. That's how smart money operates. We don't operate by our emotions. Oh, the market's up today, so I feel happy. Oh, the market's down today, I feel unhappy. No. What is the data telling us? And how is it setting up? Is it setting up for the price to go down or up, right? And things like the MVRV is a good indication of that, because just like we were comparing Bitcoin, Ethereum, we're now looking at XRP. Which one has maybe the better bet of running up? And it doesn't mean these coins will move in the long term. It's just maybe in the short term, because like XRP was super overheated at the end of the year and even the beginning of this year, it has to cool down a bit.
Yep. Great way of putting it.
How about Solana? And what's happening on that front?
Yeah, let's check it out. So Solana, we're more limited on our on-chain stuff. You can see it reds out the MVRV, but we do get a lot of good info from its sentiment. So I'll pull up our positive versus negative sentiment ratio here, and we'll see how Solana's looking. So it had a lot of bot activity. I think we might have talked about it a little last time we chatted, but that's calmed down. Right now it's getting maybe like a 2.4 to 1 ratio in terms of positive versus negative commentary, which is pretty neutral. It's been mostly under the radar because it's dropped a little over the last 8 days, down about 7.2%. So it's kind of falling behind in the party. I think that might be a good sign. The fact that our sentiment data for Solana it's actually, if we highlight today, you can see that faint horizontal line. We haven't seen a day with this low of sentiment on it since April 7th, which was kind of peak FUD time, right? So even though this is at like 2.3 to 1, which it would be high if it was Bitcoin, but a lot of altcoins, they're on their own axis. So Solana, to me, actually looks like a pretty decent bet for a rebound, assuming markets can stay afloat, right? But it looks like it could rebound pretty well because of the fact that the crowd is starting to really show signs of turning against it.
And the common theme, we always talk about, the market does the opposite of the herd, the crowd, right?
Exactly.
Yeah.
So if you want to be a contrarian right now, the contrarian thing to do would probably be to buy or add on to your bags a little bit. Not investment advice at all, but that is the unpopular thing to do while all of the focus is on Bitcoin and Ethereum.
Oh, absolutely.
Mainly Bitcoin. Yeah.
Yeah. And then it's funny how these things set up as the rotation of liquidity happens from Bitcoin down to the altcoins, right? So every dog has its day. And then if the setup is like this, where the herd, the crowd is saying, this is not going to move, it sucks, it's dead. They were doing the same thing for Ethereum. Then all of a sudden it rallies and then it forces the crowd to jump in.
Yeah. We put out some content like about a month ago on Ethereum. And I don't think it got like very much virality to it. I wasn't surprised, but we wrote about how the crowd was so against it and almost kind of laughing at it because of its 3 years just about of underperformance going back to early 2022. And we kind of just loosely suggested that the metrics were looking pretty strong if, the overall markets could start to climb. And of course, it does. Some of our strongest predictions don't get much attention at the time we release them because the predictions are against what the crowd's narrative is. So we're in this constant flow of our most correct calls that our data is showing are the ones that rarely get the hype or the attention unless people go back 3 weeks and they identify our calls. You just don't see many people paying attention in real time because they're like, oh, why are they shouting out Ethereum? That coin is dead and it's been trailing the pack for so long. Maybe they're trying to pump their own back. That's never our intention. It's the number 2 market cap in crypto. And it's in our best interest to show people that there's these crazy divergences showing because we want to demonstrate how the platform works. And then when we end up incorrect, we don't try to boast about it. We just say, try to use this for next time. And maybe you'll identify a good spot to buy a coin that everyone's ignoring.
Absolutely. And that's the same thing I try to push on the podcast. Like even in the boring times, I notice, the views go down. And I'm like, this is a time you should be paying attention to see what's happening, especially with the data, what's setting up to come next, because you don't want to be part of that crowd or the herd that when the price is up, you're happy. And that's when you're engaged and you're actually paying attention. But as an educated investor, you want to be looking at this data over time, not just because something is moving sideways or it's kind of boring. You ignore it. I don't need to pay attention. No, you need to pay attention, because that could be the set up the moment you can get a buy opportunity or something, or exit the market because something detrimental is coming, or not really detrimental, but the downside trend or whatever.
Yeah, totally.
Okay, final item, meme coins. I've been seeing some of these meme coins are coming alive again, man. Not something I'm happy about, but it is what it is.
Yeah, let's just look at the overall discussion rate. So make sure we're up to date here. Yeah, so we definitely had some moments when crypto was really seeing this rally in late April. It took a little bit of flatness. So Bitcoin went up from like something like the 19th to 22nd or so. And that got a lot of people bullish again after so much fear around here with the tariffs. And then, of course, we get this big profit redistribution. Meme coins are going nuts around here. And that's why we see this big spike. It's not bots. This was legitimate, just tons and tons of FOMO going into Doge and smaller meme coins, Trump, stuff like that. Then we retrace, and all of a sudden people don't want to talk about them anymore. Not a surprise. We get another mini rally and meme coins go up again. And then it just went flat. Meme coins were doing their thing, kind of depending on which one you picked. Some were going up, some were going down. And then due to this all-time high and just the pace we were at the last 3-4 days, meme coins just aren't getting much attention, even though there's still plenty that are doing well. We can check out the watch list for meme coins really quick as a final screen to share. I'm just going to put the bar chart on. Okay, so yeah, just over for past 24 hours, you're seeing tons of gainers. Let's go back to last week. Yeah, so there's actually not many coins that are doing that well. So this is quite a divergence to me. The fact that Bitcoin has done this well without bringing up a lot of these meme coins with them, that means it's a legitimate rally because it's Bitcoin getting the increase in market cap, but it isn't just evenly being spread out the way we were seeing in 2024 and everything going up together.
Yeah, that makes sense. And maybe it's like the crowd overall, still cautious because they don't know what to come next. But I think it's funny. It's a psychology thing, right? Once the new all-time high is hit, then everybody gets excited. Oh yeah, okay, it's a real rally.
Yep.
It's legit. It's time for me to come back in. But that's, of course, not the crowd you want to be a part of. But I'm assuming, just because we've seen it, the rotation liquidity, some of these meme coins are going to go crazy as we get deeper into this run.
Yeah, I mean, it's all going to be on Bitcoin to stay afloat. If it can be in this 105 to 109 or 110 range, whatever it is, that's good for altcoins. And we can see some of the profits that we've been seeing going into Bitcoin over the past week finally start to redistribute into a lot of these. It's a double-edged sword, though, because if you're holding Bitcoin and you start to see Bitcoin ranging and going flat while suddenly meme coins start pumping, usually that's a signal that we're reaching the end of the crypto rally overall. So if you want to take a gamble on the way the crowd is going to divert their attention next and buy some meme coins, not investment advice at all, there could be an argument for it because they've been lagging so far behind Bitcoin. And we've seen this story before where Bitcoin starts to taper off and then the profits go into all these speculative assets and then we retrace. So if you are confident we're on, part 2 of that cycle and not just going to retrace right away, figure out which Telegram groups are trying to pump meme coins and have some fun with it. We don't discourage fun, but just know, I know you feel the same way, Tony. These are not coins that are constantly trying to innovate the crypto ecosystem.
Wait, you're telling me Bank of America or JP Morgan is not going to use meme coins?
That's going to be a tough one for them to want to go forward with. So yeah, that is probably what I'm telling you.
Yeah, for sure. No, I'm really curious to see what the market does next. And obviously, folks, you got to expect volatility, right? You're going to see flash crashes. You're going to see retests of support. So just keep looking at the data, and that's what we're trying to show you guys here. So, Brian, great stuff. I know we're going to meet another couple of weeks, so hopefully, fingers crossed, Bitcoin is 115, 120,000. That would be really nice.
Yes, sir. We'll have a lot to talk about if that happens, but no matter what, I'm excited to chat markets again in a couple of weeks. And thanks as always for having me.